Good morning, everybody. Hopefully you had a great weekend. Long weekends are always nice. We did have some, I don't know, a little bit of red futures hitting the market this morning, which is unusual. But hey, it's time to get into things. This is Trading Places Live, and it is Tuesday, January 21st, 2020. It is so good to be here with everybody and really looking forward to the week ahead. I will say before we get into anything, this is a week that the market typically struggles. We normally have difficulty when we get past options expiration, that week following options expiration. So I think this is going to be an interesting week for the market to see whether or not we actually follow historical patterns and maybe see a little profit taking this week. It might behoove market makers to see lower prices with the huge rally that we had at the end of last week heading into options expiration. But so far, so good in terms of January performance. January is up now on the S&P 500 by more than 3%, and that could bode well for the rest of the year. But let's talk a little bit about what we're going to get into today. Of course, we'll start off with the daily market recap. Got talking technically. Interesting information on the dollar there. I think you might be able to gain some maybe investing advantage using the dollar. Earnings spotlight, got earnings season beginning to kick in. I'd say things are starting to pick up this week. Number of bigger companies reporting. It'll really pick up the next couple of weeks, and I will be here to go through a lot of those earnings reports with you. Upgrades and downgrades today. Scooter movers. I want to show you a little bit about how you can use your dashboard and make sure you've got your dashboard set up to include those scooter movers. And then we will wrap up the show, as we always do, with 3 you must see. Those are 3 stocks or 3 charts, not necessarily stocks, 3 charts that I think you need to take a look at and that could impact your trading. So you want to stick around for that. That's how we'll wrap up the show. All right, do want to talk just for a minute. Today at 4:30, I've got a sneak preview of Q4 earnings over at earningsbeats.com. You can simply register. It's a free event. So our entire Earnings Beats community is invited. So not only our paying members, but also free newsletter subscribers are invited. So you can simply register there. You can see on your screen by signing up to the free Earnings Beats Digest newsletter. You can go over to earningsbeats.com, and I am going to show you exactly what you will see. If you go over to earningsbeats.com, here's the screen. Simply just type in your name and email address and subscribe. That will just get you into the free newsletter. No credit cards, nothing like that. This newsletter goes out 3 times a week. It focuses on earnings, relative strength. If you want to improve your skills in those areas, how to trade earnings, looking for earnings gaps, different ways to evaluate relative strength, all of that. It's usually just a quick blurb 3 times a week, comes out Monday, Wednesday, Friday. So sign up for that, and we will give you room instructions later today on how you can join us for that sneak preview of Q4 earnings. All right, let's jump in to the daily market recap from Friday. Of course, here in the U.S., markets were closed yesterday. So this is Friday action. The Dow Jones Industrial Average finished at another record high, 29,348. I wouldn't be surprised to see a pretty quick trip through the 29,000s. The market is on fire. I do think this is the week. If we're going to pull back, I would say this is the week. If we don't pull back this week, I suspect this continues right on into the end of the month and into February. And I wouldn't be surprised to see 30,000 right around the corner. I mean, we're only talking about 650 points on the Dow, which is just a little bit more than 2%. The way the market's been going day after day, moving to the upside wouldn't take a whole lot. S&P 500 up 13, breaking out to yet another new all-time high at 3330. The NASDAQ, another record there, up 32 points, now approaching 9,400, just keeps rising. The mid caps and small caps both kind of pulled back a little bit on Friday. They gapped up. They'd had a very strong week throughout last week, stronger than the other major indices, but did pull back after gapping up on Friday. We'll see whether or not there's any gas left in the tank later today. Communication services strong on Friday. Internet stocks just absolutely powering ahead. There are some longer term patterns that have been confirmed. The breakout of those patterns has been confirmed on the internet group. I think this is the start of a big run. I think we're going to see another 300 points higher on internet stocks in 2020. But they did finish over 2,100 for the first time on Friday, and that helped to lead communication services higher. Utilities also had a strong day and a strong week. This was the best performing group last week, which is a little bit of a warning sign. I think it just tells us the market's getting a little bit more nervous and moving into a defensive area like utilities. But they're not too nervous because you can see technology continuing to move higher as well. So really, it was almost across the board on Friday. The only group that finished negative on Friday was energy. And you can see January has not been kind so far to energy stocks. We've seen crude oil prices continuing to move down. They were down again today. In fact, all commodities were down. We've got U.S. futures down. A pretty rough night overseas, especially in Asia, where the Hong Kong index took a pretty big hit. I think it was down 850 points or something like that. So a lot going on in the market. We're going to start off a little red today, and then we'll see where we go from there. The 10-year Treasury yield, I wanted to kind of go through that as well. We did rally on Friday, got back up to the moving averages, but you can see already that today, I'll give you a quick update. Right now, the bond market, 10-year Treasury yield down 1.794. We're down 4 basis points, so money is rotating into Treasuries today, sending the yield lower. That is something that we want to be conscious of and continuing to monitor. All right, let's move on to talking technically, and I mentioned the dollar, and I want to show you just a couple of things here that I think might translate into a good trade. I believe the dollar is going down. I've been talking about it for quite a bit, and I'll show you a chart that helps to explain why I think the dollar is going to remain in this downtrend that we've seen since October. We did come up on Friday, and you can see the dollar index did clear probably 1 month highs, moved to 1 month highs, but it is challenging the moving average. It is still in a downtrend, lower low, lower high, lower low. So I think the downtrend remains in play despite the rally on the dollar or in the dollar on Friday. But one thing to note is that since we topped, we put this double top in here on the dollar and started declining. Notice that the EWG, which is the ETF that tracks German stocks, the EWG relative to the German DAX has been going up. Now, the EWG is basically designed to track the DAX, but there's a dollar component. And when the dollar is going up, EWG tends to underperform the DAX. When the dollar is coming down, that's when we tend to see the EWG outperform the DAX. So the question is, what does the DAX look like, and will the dollar continue its decline? Well, let me show you the DAX. Here is the DAX, and you can see just now breaking out above these prior tops. PPO, this is on the daily chart, PPO starting to turn higher, not overbought. RSI is only at 62 on the daily chart. So I think Germany looks pretty strong here, and if we go out to the weekly chart, you'll see that we have been now uptrending for over a year, where we've gone from 10,250 up to 13,500. Last 13 months have been pretty kind here. That's more than 300 points, more than 30% in the last 13 months. Also, if you notice, that weekly close last week above 13,500, first one in history for the DAX. So the DAX is just making a breakout above this, throughout this consolidation period. We never had that close above 13.5. We got that last week. We also have the DAX trending higher above this 20-week moving average, which is pretty important. That signifies to me anyway that we are in an uptrend. So we're breaking out in an uptrend. DAX looks good. Now let's look at why I think the dollar goes down. If you look back to the tail end of 2018, the yield here in the US versus the yield in Germany was still rising. And that normally relates to a strong dollar. As you can see, the yield in the US minus the yield in Germany had been rising for more than 6 years, probably 7 years. And throughout that period, we had a strong dollar. Well, if you look now, we're seeing things pick up faster in Germany than they are in the US. So this is telling us maybe that the economy in Germany is strengthening a little bit more than what we're seeing here in the US. And if that's the case, if our economy is weaker than other areas, and our Fed has kind of put the brakes on rate increases, and if anything, looking to possibly lower with low inflation, that would tend to weaken the dollar. And you can see the dollar starting to roll over here. I expect the dollar, and I've been talking about this, I think the dollar is going to go lower. We had a negative correlation or an inverse correlation where we saw the U.S. Treasury yields falling, or at least not moving up as fast as the German Treasury yields. And as a result, we would expect the dollar to go down, but it didn't. The dollar kept rising. So for the fourth time in the last 10 years, we've seen that inverse correlation hit minus 0.5. It doesn't happen very often, but when it does, the dollar has been the one to rebound back and kind of make things right. So in this case, the dollar should be dropping, and I think it's going to. We just set a new low on the U.S. 10-year Treasury yield versus German's 10-year Treasury yield, and that, to me, suggests that we are going to go lower. So that gets me back to this chart where if the dollar does go lower and we're getting a breakout in the German DAX, what a great way to play the German DAX by being in the EWG. Everybody's got to make their own decision, but based on the charts, it looks to me like the EWG would be a nice play. All right, let's move on. I want to move on to the earnings spotlight. And today I'm going to start off. Earnings are pretty light right now, but they're going to start to pick up more this week, and then we'll really get into it the next couple of weeks. But Halliburton came out this morning and posted results that beat top line, beat bottom line, said they are expecting improvement in international margins in 2020. Stock is up about 2.5% in pre-market. It's in a nice uptrend here. I think Halliburton looks pretty good, despite the fact that energy has not been doing very well. Look at the relative strength. Halliburton challenging about a 7-8 month relative high here. So you've got a stock that's starting to uptrend, and it's beginning to show strength relative to its peers. Yes, it was downtrending while it was doing this consolidating, but I believe it's now got a nice report. Watch this relative strength line. I think you're going to see it turn back up again. And I wouldn't be surprised to see Halliburton go up and take out this 25.50 resistance area in time. Next up is CMA. This is Comerica. They also reported their results. I didn't see their revenue numbers, but they did come in with earnings per share 185 versus 174. So pretty nice beat on the bottom line. The stock, though, was down almost 2% in pre-market, and you can see it is trending down and below its moving averages. It's in the banking group, which has been moving higher. Look at the relative weakness in this stock. So here it is coming out with earnings, beating by 11 cents on the bottom line, which is about 7%, better than expected, and the stock is down 1.78%. And it's been mired in this relative downtrend. Stay away from these stocks that are not performing well on a relative basis. That's all I can say. I think that it's a big mistake. Sitting back and trying to make excuses for the stock. If Wall Street doesn't like it and is throwing it out, we shouldn't like it, and we should throw it out. There will be a time, CMA will, at some point, will probably rally back and start to show relative strength, and that will be the time to think about getting in. A couple of education stocks reported this morning. EDU, this is a $21.5 billion market cap company. They beat on their top and bottom line. But they guided their Q3 revenues lower, and the stock is down 4.25% pre-market. It just recently hit a 52-week relative high. So the market was telling us it was going to be a good report, and it was. They beat top line, they beat bottom line, but they've now guided Q3 revenues lower, and the market was not anticipating that. This could be an opportunity. I've always said I would rather have a company beat top and bottom line and guide lower than to miss top and bottom line and guide higher. And the reason being, these are promises that management's making to Wall Street. And if you just missed your top and bottom line, why should I believe that you're raising guidance that you're going to hit those numbers? Whereas I like management that's conservative. If you just beat top and bottom line and now you're being conservative, I think that can be an opportunity. So EDU, I would want to watch the 20-day moving average and watch this relative strength line. But there's a reason why this has been going up relative to its peers, and this could be an opportunity with the stock down 4%. We'll see whether or not it rallies. I'd like to see a hollow candle, maybe coming off of the 20-day or maybe from just below the 20-day. We'll see. Another education stock, TAL, beat on the top line. Big miss on their bottom line, though. 9 cents versus 17 cents. Stock is down 9.3% pre-market, or at least it was maybe a half hour ago. You can see the stock came back down last couple of days. Friday was a pretty rough day. But this is another one that was showing relative strength and was at a 52-week high. Kind of surprising to me that a company is going to miss by that much, 9 cents versus 17 cents, when it's performing as well as it was technically. This is a huge move. Stock goes from 31 to 56. I don't think too many analysts were expecting a big miss like that on the bottom line. So let's see what happens these two stocks after they gap down. 9% though, we're talking about probably $4.50. That's going to take it down somewhere around 50 or below 50. Let's see what happens to stock after it opens up today. Also wanted to just mention that earnings coming up after the bell today, Netflix will be reporting. This is a big one. We've got IBM, but IBM disappoints so often. I don't think anyone really expects a whole lot out of that company. Netflix, a different story, though. This is a company that's been downtrending relative to the internet group. Internet has been on fire. Will Netflix blow out the numbers, get a big gap up, maybe take out these highs, or will it be more of the same with the relative weakness coming in? This is going to be one of the more interesting earnings reports, I think, throughout the season. We'll see. All right, let's move on to upgrades and downgrades. I want to start with a company, ARAY, Accuray. They will be, well, they are upgraded. The stock's been moving really well. Last 4 days, 5 days. Last week, it went from 260 to 360, which is roughly 40% almost, 38%, something like that. Before putting in a reversing candle, that is a bearish engulfing candle on Friday. I would have expected a down day today. It is getting upgraded, so it's probably going to start higher. I'd be a little leery, though, after that huge move last week, getting this upgrade. I think you might get an opportunity down a little bit further. I'm going to say around 310, maybe to challenge this high, maybe even a dip below 3 to challenge that rising 20-day moving average. But I would not be jumping in on the upgrade at this point. I do like what it did last week, and it may be reversing that downtrend, but I think it needs to pull back a little bit after that huge week. All right, next up, let's take a look at Caterpillar. Caterpillar, it is, well, I think it's sitting in a pretty nice little consolidation. Let's see, it reached a high of 147.50 back in early November, kind of sideways action. We're still sitting there, so it hasn't participated with the market, and that's what relative strength will tell us. It's been going down, but relative strength tends to deteriorate when you're consolidating. We had a nice move up. I think this is a bullish pattern. We're getting an upgrade on Caterpillar today. We could get a breakout here. I actually like Caterpillar. Costco. Costco upgraded. This is a really nice pattern. 3 equal highs coming across at about 305, higher lows. I see an uptrend, an ascending triangle. The pattern on a breakout from 305 down to 280 or 281, 24, 25 bucks. I'm going to say 330 target here. And with the upgrade, that could be what sends it through the resistance area. I think Costco goes higher. I like Costco. Intel upgraded today. Of course, their earnings will be coming up pretty soon as well. I think they report, it's later this week, Thursday, after the bell on Thursday, Intel reports. So they're getting an upgrade. I never did understand why analysts would upgrade 2 days or a day or even the day of earnings. Doesn't make any sense to me, because there's likely to be something huge that happens with earnings. So I don't really like analysts making calls at this point. That's just my opinion. Intel, I think, looks okay. Yeah, I thought it looked better back a couple months ago. You can see the relative strength versus the semis has been going back down, but semis are on fire. So as a result, the semis are kind of dragging Intel with it. AMD has been the much better performer by far. Intel looks okay. They really need to have a good report on Thursday, get a breakout, and then maybe show some relative strength. So upgrade I'm okay with because of the group more so than the individual stock. JB Hunt, this is a trucker being upgraded today. Tell you what, the truckers made a huge move last week, made a breakout. They had a bad day on Friday, and you can see JB Hunt pulled back on Friday as well. I would watch this triple bottom down here around 111. I think as long as that holds, I'm a big fan of the transports right now. I think the transports go higher. I think that the transports are going to do extremely well in 2020. I think that's going to carry the market a lot higher. And so I'm going to be a fan of most transports, just some are going to be better than others. JB Hunt, on a relative basis, really took a hit last week, moved down to about a 4-month relative low. I just want to make sure that the price support holds, and I'm going to say 111. Watch that level. All right, let's go with, let's see downgrades here. Let's do one or two quick downgrades. BAC. Bank of America, move up, sideways consolidation. I do not agree with this downgrade. Bank of America just just posted a 52-week relative high to the bank group. The banks have been strong. We have seen the banks pull back a little bit recently, but it's been consolidation. Market's been going up, money's rotating. I think money rotates back into the banks. I think Bank of America is a buy. I would be using any weakness as an opportunity to get in. I think it's one of the stronger banks out there. Dollar Tree also downgraded. This one I would stay away from. Huge move down, big volume, relative strength is in the tank, not only versus its peers, but versus the S&P. Volume trends are horrible. I agree with the downgrade. I would stay away from this one. All right, let's move on to the scooter movers. And what I want to do here with the scooter movers is just make sure everyone is aware of this little gear shift here in the dashboard where you can have your additional data panels checked, scans, alerts, chart list panels, commentary, and so forth. But the additional data panels, if I uncheck that, you will see I lose some stuff here. There's that row. So I want to go back here and make sure I have that checked. And now you can see my scooter reports showing up here. The scooter reports, I have them set up. Now you can, change this. You can have sector summary, do sector summary. You can do a lot of different things with this, but I'm going to stick with these scooter reports, large cap, mid cap. Here's got a drop down menu, and small cap. So it's just telling me which ones are moving. I can do the top 10, which is just telling me which ones are the best in each of these asset classes. I can do the bottom 10, the ones that are the worst, or I can see which ones have really been moving to the upside or to the downside. So for instance, on Friday, CFG, which is Citizens Financial Group, was the top scooter mover. It went from 38 to 63. So it gained 25 points. That's what this is saying. Now, you can take your cursor and go right across all of these stocks and get a quick little mini chart. But you can see that's just a couple months. I have my candle glance set up for 4 months. So if you go down here to the bottom, you can pull them up in candle glance form, where in candle glance form, I now have 4 months worth of activity, and I can take a quick look across and see which ones might be, more interesting to me. So I'm looking at maybe Motorola Solutions because PPO is going straight up. It's had a big move. Maybe we'll get a pullback, but it's trying to make a breakout. Well, if you click on the chart, it'll come up in your default style. So here it is in my default style, which is just a 1-year chart. But then I can go over here on my chart style buttons, and I can quickly pull up my relative strength chart. And I can see that this is a stock that's been kind of downtrending a little bit relative to its peers since back at the beginning of September. The group itself has just made a breakout. It gives me a lot more information. So if I can get a breakout and see the relative strength start to pick up, then maybe I'd look a little bit harder at MSI. Right now, probably wouldn't do a whole lot. So, but that's the candle glance. And then if you go over here, you can also pull up the RRG. Now, the RRG, the default is going to be the benchmark S&P 500, which with large caps, that's fine. But if I go back over here and do the small cap RRG, and I want to do, let's do the top up. And I do an RRG. Here, I want to change this to the SML, which is a small cap benchmark. And let's go ahead and update. And now I can max this out, and I can go all the way back to the beginning of the year. This is a 1-year chart, and I can see what has been going on. Look at NVAX. So if you go down here and you highlight NVAX, that's the only one that shows up. And then you can watch how this stock performs relative to small caps. It has remained on the left side over here. So relative strength has been negative versus small caps, even though we saw improvement right here where it turns and starts heading back to the right. All of that, and Julius will tell you, that's really strong action, but it's turning back down before it breaks over here and starts to show strong, relative strength. So the momentum picks up, it improves relative strength, but it's not positive, and then it rolls back over. So anyway, just wanted to point this out as an opportunity to make sure that you're using some of the tools that StockCharts offers, which I think are really, really cool tools. But just that quickly, I can go from scooter movers in the dashboard to either candle glance or to RRG and quickly find potentially some opportunities. All right, let's move on to the 3 you must see, and I am going to start with an index. I'm going to start with the Home Improvement Index. So this is the Dow Jones U.S. Home Improvement Retailers Index. And the reason I wanted to bring it up is it's getting close to a breakout. It had a really strong end of last week, coming off the 20-day moving average. You can see the 20 moving above the 50. You can see the PPO now has turned positive. So a lot of positive things are taking place. You've got an uptrend in play, and now we're essentially maybe putting in the right side of a cup. So if we do fail today and we pull back, watch that rising 20-day moving average, because I think any kind of a pullback down to that 20-day could be a great opportunity to get in before it makes the breakout. Now, I would, down to 20-day, I'd be a little bit more discouraged if it were to lose that and the 50-day and move back down, and especially this short-term uptrend that's been in play, move below 450. Each one of these steps to the downside, I think, would be a little bit more negative. So we want to kind of watch that, but I think we're in a bullish pattern here. We saw it go up, a little bit of a cup here. Handle was a little steeper than I would have expected, and then a breakout. Notice the pullback came right back into this gap support area, price support. And so I think we're just consolidating before we make that next big push to the upside. So this is a group to keep an eye on. Within this group, I wanted to bring up BMCH, because most time you think home improvement, you think Home Depot, or you think Lowe's. Over the years, Home Depot has been a better performer than Lowe's. But I would argue that BMC Stock Holdings, BMCH, is better alternative than both of them. This stock is already broken out. And if I show you this on a relative basis, BMCH not only is breaking out here with the group not yet ready to break out, that's showing relative strength. So in December, we hit a new 52-week relative high. So the price action, the absolute price action is moving higher, and so is the relative price action. I mentioned earlier, you want to stay away from stocks that are just absolutely lagging and are just horrific. I think I talked about that with one of the downgrades. Which one was it? I think it was DLTR, Dollar Tree. Well, this is the opposite. This is the polar opposite. You got a group that's getting ready to break out, and you've got one of the best performing stocks in the group. So these are the types of stocks that I would be more interested in owning. Last one I wanted to show you was LCI, which is Lanet. This is the final one of the 3 you must see. Stock came back up, made a nice breakout, did print a dark cloud cover on Friday. So maybe near term, we get a little bit of a pullback. If we can't hold this price support at 950, watch this moving average here. We're just getting a positive PPO. I think LCI looks really good here. But again, you might be able to get it a little better price. So LCI looks interesting to me. All right, that is it for today. I want to thank everybody for watching. Really appreciate you tuning in here. Always can catch me here on StockCharts TV Tuesdays and Thursdays at 9 a.m. Would love to see you again on Thursday. Everybody have a great day. Happy trading. Take care.